As Commerce with Mac here today to teach you Cambridge Accounting 7707 October November paper 2 question number 3. Before we move on to this question and solve the paper, I wanted you to remind one particular thing. Please subscribe to the channel to learn with me more in future for related subjects such as accounting, economics and business studies, Cambridge and Edexcel AS and A-level. On 31st July 2021, the following information was provided by KA Limited, a manufacturer of a garden tools. So this is a manufacturing account, a very simple one, not a hard one. So we're going to do how to record this type of transaction in a manufacturing account along with that income statement. As I always say, when you have a question to do, always move on to the information bar first of all and see the additional information. Then when you're doing the sum, it will save a lot of time when you're doing a sum. Here you can see on 31st July 2021, rates were 500, which was prepaid. Rates are to be apportioned, 75% goes to the factory. Factory means they are meaning it's a manufacturing account. Office means they are meaning it is an income statement. So in exams of manufacturing papers, factory means it's manufacturing account. Office means it's income statement. On 31st July 2021, factory general overheads 230 were accrued. It's an accrued expense. So accrued expense should be added to the factory general overheads. Prepayments should be deducted from the rates. Then we move on to the third adjustment. Factory machinery is to be depreciated at 20% per annum using the reducing balance method. So as you all know that depreciation has two types of methods. One is straight line method where you can directly assess the cost and find the depreciation. But then here it is reducing balance method. So you should take the cost, deduct the provision for depreciation and multiply it into the percentage they have given. So it's a very straightforward sum which we can do. And let me see how much marks they are giving. On the first A part, they're giving 10 marks. Wow, it's so awesome. It's a very easy score. And then we have 4 marks 4 marks for the B part of the question, which is the income statement. And you need to note one particular thing in this income statement. They are not asking the complete income statement. They're asking you to prepare the income statement trading section. So trading section means it's the only the up part, the gross profit. Until the gross profit part, you need to calculate. You should not go more than that on calculating. Let's move on to the point we want to discuss today. The first one. So I'm going to read one by one and record. And you all know that we have few things, which is additional information, which is going to have some sort of relation between the listings which I'm going to read now. So if we have any connection between the figures which I'm reading, we will stop and start doing it from there. So if you have not taken your paper, take your paper, start doing with me, so you can learn a lot of things in this sum. So starting with the first one, inventory 1st August 2020, they have given 3 inventories: raw material, work in progress, and finished goods. So where does this comes? It's the best first question. Remember, for raw materials, always you take it on the direct raw material and the prime cost, and then working progress comes under the last part of the manufacturing account, and finished goods should come under the income statement. So with that knowledge, we're going to start recording these figures. So I'm going to move on to the first sheet, manufacturing account, and start with the first topic, direct raw material. Always remember to start with the topic direct raw material when you're doing manufacturing account, because there are 3 things which you need to take under prime cost: direct raw material, direct labor, and direct other expense. So with that topic, I'm going to start the first one, direct raw material. We have opening raw material. So I'll write opening raw material. So after recording opening raw material, I have a figure to write it down. What's the figure? So I'm going to take the amount, 5,820. So I'm going to record 5,820 on the first column. Then after recording this, I will move on to the second part of the sum. It says working progress 1,750, which is opening. How do I know it's opening? It's on 1st August 2021 and closing date is 31st July 2021. So with that knowledge, I understood it's an opening balance. So we're going to record opening working progress. So I'll leave a comparably some space for me to go down. So it's very easy for me to record the opening working progress. Maybe around 17 to 15 lines. So I'm going to make it a bit smaller. Yeah. So you'll have a complete view. So opening working progress. So after recording this, you should have a computer when you're learning this, because these videos might be a bit small in your phone. So it's better you can zoom a bit and see if it is in your computer. So we'll move on to the point we want to discuss. So opening working progress had a value. What's the value they have given? 1,750. So recording 1,750. So opening working progress we can directly take to the second column. Yeah. So one more thing you wanted to add in this near opening working progress. Remember to put a term add. So it's an addition. So you write add here. Then we can move on to the next part of the sum. And there's something called finished good, which, as you all already know, finished good means the opening stock of cost of sales. So I'll leave one line to two lines for revenue, and then I will put a topic cost of sales. I'm going to zoom a bit so you'll have a complete view on what I'm going to do. Let's zoom some more. So here I'll record cost of sales, and under that I'll write opening finished good. You can write opening stock or opening finished good. So I'll write as the term they have given, opening finished good. So after recording opening finished goods, what do I have? I need to know the value of the transaction. The value of the transaction is 12,360. So I'll record it as 12,360. After recording the first few transactions, I'm going to move on to the third purchases. Raw material they have purchased 34,200 and finished good they have purchased 39,000. So raw material goes to manufacturing account and finished good goes to income statement. So 34,200. So I'll move on to the manufacturing account. You can see here, I'll type here manufacturing. So it's easy for us to understand. Then we are moving on to income statement. So under manufacturing, I'm going to take the purchase of raw material. So I'll write purchase raw material. What's the value we're going to take for purchase raw material? We are going to take a value of 34,200. So I'll record here 34,200. So I'll zoom a bit and show you what I have done. So I have recorded purchase raw material 34,200. Then under income statement, I'm going to record under cost of sales. You can see income statement here. I'm recording purchase finished goods 3,900. So after recording these two transactions, I'm moving on to the next part. We have carriage on purchase, which is carriage inward. They have not said carriage outward, so we consider it as carriage inward. And carriage inward is a transport cost. You need to add it under cost of sales, and then you need to add it under direct raw material under manufacturing account. So moving on to the raw material 410, I will record it under manufacturing account as carriage raw material, or carriage is also fine. So they have they given any other names for this? Only carriage means carriage on purchase. You can write carriage on purchase. Carriage inward is also fine. So 410. Then for finished goods, they are given 80. So you should record 80 under income statement as carriage on finished goods. Finished goods. So 80. So recorded. Then we move on to the next part of the sum. We have direct wages 67,200. So direct wages, you need to take some space, you need to leave when you're doing it under direct wages, because direct wages is a part of prime cost. You all know prime cost comprises of three parts: direct raw material, direct labor, direct other expenses. So here I will leave some space, maybe 3 lines. I'll write direct labor, and they are given under direct labor direct wages. So let me check what is the term they have given again. It is direct wages. So I'll write direct wages under that. So let me put direct wages. Let me underline this, and I just want to know the value of direct labor. What is the wage they have paid? The amount they have paid is 67,200. So I'll record 67,200 under direct wages. So after recording this, I'm moving on to the next transaction of the sum. It says indirect factory wages. There's nothing related to direct wages and indirect factory wages. Was there anything? No additional information. So I'll directly take indirect factory wages under topic called production overheads. So I'll leave some space for direct wages, and I'll put a small topic, production overheads. The production overheads means indirect expense of the manufacturing account. So you all know, let me remind you a few things. Prime cost comprises of 3 parts: direct raw material, then we have direct labor. This can be tested in your MCQs as well, guys, so you can make it a note, and direct other expense. right? So you can see here. So direct raw material plus direct labor plus direct other expense. Then how do you take the total production cost? Total production cost. We take the manufacturing accounts full balance by adding two things. One is the prime cost, which we already found on the above formula, plus production overheads. Production overheads. The indirect expense of the manufacturing account. So now they are given indirect wages. So I'll write here indirect wages and the production overhead. So I'll put a topic for this, a small underline. Then we'll move on to the point. So indirect wages is factory wages 24,000. So I'll write 24,000. So here I forgot to write factory wages. It's 24,000. So we recorded 24,000. So after recording this, we move on to the next section of the sum. So we have factory machinery at cost. Now there was some sort of depreciation calculation. So I'm going to take this. You can see this factory machinery at cost, and I'm going to calculate the depreciation for the sum. So they are given provision for depreciation. As you all know, it is a reducing balance method. We need to take the cost, deduct the provision, and then calculate the percentage. So I'm going to move on to the directly to the additional information number 3. You can see number 3 is the transaction which you're going to do now. I'm going to put a tick for you all for your understanding, guys. So third is the transaction which you are going to do now. So remember, after that we are like based on the transaction which you see, we are going to see which is going to cross check. Either way you can do in exam. First you can finish the additional information and go for the paper. If you are very good in calculating and you want to save time, then of course you can do the like with the transaction you can do the additional information. So we are doing the third transaction now, third additional information. Factory machinery is depreciated 20% per annum. I need to know the cost of factory machinery 47,000. Provision for depreciation is 11,000. So I'm going to move on to the calculation here. Small working for you all. Okay, I'll write working 1. Okay. So yeah, working 1. So we are going to take the reducing balance method, depreciation. So I'll take 47,000 is the cost. We all need to know the formula when you're doing this. Cost minus provision for depreciation, and then into the percentage. That's how you find the reducing balance method. If you straight line method, cost into percentage. So here cost is 47,000. Provision for depreciation they are given 11,000. I think it's 11,000. Let me check it again. 11,000. So 11,000 is the provision for depreciation. So I'll record here 11,000. Then you get 20%. So 47,000 minus 11,000 will give you 36,000 into 20% will be 7,200. If you have a calculator, please take the calculator and calculate and see it. So I'm good in fast and calculating, so that's the reason I'm not using a calculator here. Moving on to the point. Now we have the depreciation of machinery. We should record it under indirect expense, which is production overhead. So depreciation of machinery. You don't want to show the workings on the paper. If you need, you can show the workings on a corner, but I don't think they have space for that. So it's better you not do the workings and show, maybe in a rough paper. If you want to attach, do the workings and attach it. Or if you have a space, maybe you can do it on a corner on the paper itself. So let us move on to the next part of the sum. We have. Then we have factory general overheads 16,400. There was another transaction for factory general overheads. You can see here. On 31st July 2021, factory general overheads 230 were accrued. If they have given a financial position, this 230 will be shown it under current liabilities. There's no financial position here, only income statement and manufacturing account. So where do we take this 230? We need to add this 230 with this 16,400, which you can see here. So once you add this, the value is exactly correct. So I'm going to take factory general overheads. It's a factory expense with the manufacturing account expense. And I'm going to add the accruals because that is related to this period. So factory general overhead will have a value of 16,400. Always remember to put it in brackets 230. So we'll get a value of 16,630. So I'm going to show it here. Maybe I'm going to increase its space for me to write. So it's very clear for me to do more workings. Then we move on to the next adjustment. So adjustment number 2 is done. Adjustment number 3 is done. Then we have rates 5,300, but there's another adjustment on the rates. They are saying that on 31st July 2021, Rates 500 were prepaid. So which means you should remove it because you can't keep prepaid amounts in the books of accounts. Rates are to be apportioned 75% factory, 25% office. So we can directly take in this way. I'm going to take here working number 2 to show you how it works. You don't want to show these type of workings, but then I'm doing this for your understanding. So rates is divided into 2 ways. So I'm going to divide this and show you how it works. Okay, one is office, then the other one is for factory. So factory percentage is 75%, and office they have taken 25%. But now, how do we find the rates? What's the amount? They have said that they have rates. Let me explain you again. What's the amount of rates they have with the business? They have 5,300. So in that 500 is prepaid. So we need to remove this 500 first of all. So 5,300 deduct 500 will give me a value of 4,800. So that's the value I should apportion it between the factory as well as office. So in this 4,800, if I calculate the 75 percentage, so I can take 75, okay, 4,800 into 75 over 100. If I do that, I'm getting 3,600. And then 4,800 into 25 over 100, I'm getting a value of 1,200. So I should send 1,200 to income statement and 3,600 to factory. But remember, this 1,200 I can't send to income statement because they have not asked the complete income statement. They ask only the trading section. So we can avoid this 1,200. I have bolded it. The 3,600 we should record it under production overheads as states. So right here 3,600. As it's a bit nearby, I'll keep some space for this working. So maybe I'll add here. So let's move on to the next one. We have inventory 31st July 2021. The last few parts which we need to do. Raw materials 6,030. So raw materials is the end of the balance they have given. We can consider it as closing raw material. Closing raw material. What's the cost they have given, guys? They are given on the sum. It has 6,030. So I'm going to record 6,030 as a deduction. Because raw material closing stock should be deducted. You all know that how it works. Okay. Then we move on to the next part, which is the finished goods. I mean, the work in progress 2,780, the end balance, closing work in progress, which should be deducted. So I'll move on to closing work in progress. So less closing work in progress. You can have a space and do, or you can do it together. 2,780. Okay. Then moving on to the next final balance. Finished goods 10,340. So this comes as closing stock under income statement 10,340. So I'll move on to income statement. Then write closing closing stock, closing finished goods 10,340. That's what it said, I think. Let me check it. 10,340. And the final balance is the revenue 223,000. So I'll record revenue here. So revenue 223,000. So then I have one more important thing to do. Before finalizing the income statement, I need to know the manufacturing account entire balance. Then I should transfer that balance to the income statement to finalize and get the gross profit. So for that, I need to finalize the manufacturing account. As direct raw material, you all know prime cost has three things: direct raw material, direct labor, and direct other expense. They are not given any direct other expense. Direct other expense can be like royalty payments, patent marks of the business, which they are not given. So I will take the direct raw material and find the total amount. Here you will get a 40,400, and you can find the total here 40,430. So now I want to know the exact value which will come to this side, the right side. So I will take 40,000 for 30, deduct 6,030. So I'll get a value of 34,400. And then there's nothing to add other than direct labor here. So I will take direct wages 67,200. Then show total of prime cost because there's no other expenses to add, no other parts to add. We will directly take direct raw material and direct labor and say it as the prime cost. So prime cost is going to be 101,600. Then after doing this, we are going to move on to production overheads to find out the cost. Production overhead has a cost of 51,430. You can see my cursor. So 51,430. I will record here 430. So when I add this prime cost plus production overhead, I'm getting total production cost, but I'll keep it blank there, 153,030. So if I add 51,430 with the 101,600, I'm getting 153,030. I'm not yet done, guys, with the sum because I wanted to finalize it by adding the opening and closing work in progress. Now I have 153,30. I'll write 153,30 plus 1,750 minus 2,780 to get my production cost. So I'll write here total cost of production or total production cost is 152,000. So that's easy, guys, to do a manufacturing account. Now we have scored a 10 mark in your exam paper. So now we need to transfer this balance to the income statement. It has total production cost or cost of production, both are same in exam. So I'm writing both the terms for you. So I will take cost of production to the income statement. This value 152,000 should be transferred to the income statement under cost of sales. So I'll write here cost of production 152,000. There's no space here. I'm bringing closing finished goods a bit down for me to do the calculation. So I'm going to take the total of cost of sales. Here you can see 168,340. So I'll take the entire balance. I'll add opening finished good with purchase finished good, carriage on finished goods, and then cost of production. So I'm getting a total of 168,340. So 168,340. I'm going to deduct 10,340. So in 168,340, you deduct 10,340. You got a balance of 158,000. So when you deduct from 223,000, which is from revenue, if you deduct 158,000, what is your gross profit? You can easily find 223,000 minus 158,000. You'll get a value of 65,000. So we will write here gross profit 65,000. So that's easy, guys, for you to understand this particular sum. So this is a 14 mark sum which we have done. So I hope you guys understood. Let's move on to the C and D part of this sum. So let's move on to the past paper, guys. So DH Limited, a customer of KA Limited, has been declared bankrupt. A debt of $350 was owing to KA Limited. This is to be written off. Prepare the journal entry to record the irrecoverable debt. A narrative is not required. So you don't want to write a description. You just want to write the double entry. So they're asking that one person called KA Limited is going bankrupt, which means we need to write off that person. It's a bad debt. So how do we record this bad debt? So you can either say bad debt or irrecoverable debt. Both terms your examiner will give you marks. So how do you record bad debt? You should always remember bad debt is an expense. So expense account increase means debit. And then what is to be credited? DH Limited is a customer. So this customer's account should be credited to finalize the balances. So I can easily write it here rather than writing it on the Excel. Here I can write bad debt, or you can write irrecoverable debt 20,000. And then you can write in this side DH Limited, that is the customer, a debtor. So debtor's account will become creditor 20,000. If you want, you can put here account. That easy. recording this 2 marks of transaction. So let's move on to the next part of the sum. I'm going to raise this off. K Limited maintains a provision for doubtful debts. Okay. Explain how maintaining a provision for doubtful debt is an application of each of the following accounting principles. So I thought rather than giving my own explanation, the marking scheme explanation is quite good. So I'm taking the marking scheme answer and going to explain you this matching and prudence. So give me a second. To score 2 marks answer, you need to know. They're asking why you need to keep provision for doubtful debts in your books of accounts. For matching is about matching principle speaks about you take your expense of the business, you compare with your income, and then reduce the level of expense. You can't keep recording the expenses without reducing it from the income. So you should always remember take your expense and match with the income and show the actual figures. Here, when you are maintaining a provision for doubtful debt, the amount of sales for which the business is unlikely to be paid is regarded as an expense for the year in which those sales are made. For example, every business will have a loss. Every year they can expect a loss. So expecting a loss is an expense under provision for doubtful debt. That's the reason that loss which you are not going to get, the money which you are not going to get from the customers, you consider it as an expense before the year end and you will deduct it under the income which is sales. And the second part, prudence, is all about not overstating the profit, not understating the expenses. So if you overstate the amount of, overstate the amount of trade receivable, it's wrong. So you should forecast the provision, deduct it from the trade receivable, so your profit will not be overstated. So here they have given a meaning. Profit for the year is not overstated and the amount of trade receivables is shown at realistic value in the statement of financial position. When you show real values, that gives the concept of prudence, where profit is not overstated and expense is not understated, because you are trying to deduct the provision from the financial position trade receivable as well as recording it on the income statement. So I hope you guys understood this question number 3 video. If you really like it, comment what videos I need to upload for your accounting, economics, business studies exams in future. And also, if you have anything, comment on the comment section so I can help you out on any type of papers which you all need to learn. See you guys on another video. Have a nice day. Bye.